Hello and welcome to another update video about ADA. Yeah, as I said in yesterday's video, ADA is sitting on the fence basically between two scenarios, between a direct breakout, which is of course still possible, but with that latest three-wave rally to the upside, again getting a little bit less realistic. It did lose support here. It did lose that dotted line support that we talked about yesterday. That was an invalidation point, so invalidation for the direct bullish breakout count that I had on the chart. And it seems to be following the yellow path, which I also had on the chart yesterday. Yeah, so again, it's not very clear overall. Everybody who wants to keep it simple, it's the 35.2 cent level for me that is the key bullish support. As long as we're holding that, we can still focus here on higher. Below that, we would drop down to 31.2 cents. That would be the next higher degree scenario. Ideally, I want to avoid that. Ideally, to maintain the overall bullish thesis here, we want to hold 35.2 cents. But within this scenario, a lot can happen. Yeah, corrective wave structures are always messy. Did explain that in some of the last videos that Mr. Elliott obviously gave us one impulse. Yeah, there is only one impulsive structure with very tight definitions. And there are, whatever, 10 plus corrective structures with various substructures. Or variations of them, like an expanded flat, a running flat, a regular flat. Yeah, you've got your zigzag, your double zigzag, your triple zigzag pattern, you've got combination patterns and so on. They're all corrections. So that's why it is so difficult to, when you label a correction, you always have to stay on top of it, right? But then the thing is, does it make sense? Because what is much more important, in my opinion, is in such a correction to understand the context, which is always clearer. So you look at the context and you look at the ideal pullback area, yeah, or the area in which the correction ideally should end. And this is the yellow box, and it did already hit the yellow box. So that is a point where I'm saying, okay, even though the Y wave down with the latest price action seems very likely, we need to be on our toes and need to be ready in case it does a direct breakout move. But for now, it's looking like, again, it's going the Y wave path with another low into the yellow box. And the reason for that is I have 5 waves down. So, so the move of the high here, of the 41.3 high, which was done yesterday, this is a 5-wave move. So it could be that this was the A wave. Yeah, because a Y wave, which is part of this complex correction, consists of 3 waves: A wave, B wave, C wave. So what I've done, I've labeled this A now, because we see some upside. We see a bit of a reaction here. We see a pullback to the upside. I've added B wave resistance. This is the typical resistance you would expect a B wave to get into between 40.1 cents and 40.1, yeah, and 40.8. And then from there, ideally, if this is the correct pattern, you would see a C wave down into the yellow box. What I will have to do, I will have to change again wave 2 and alt 2, because I think it's now following this path. But alternatively, wave 2 could have already bottomed, but then this is only a 3-wave move, so it wouldn't be really a likely move if it breaks out directly from here, unless it's some kind of a weird diagonal pattern, which is always possible, but never really the direct expectation. Bear in mind, today we've got CPI data release. I'll do a live stream at 1 p.m. Eastern, 1 p.m. okay, UK time, but that would be 8 a.m. Eastern time and 12 o'clock UTC. So we want to talk about things, because things can change very quickly when the CPI report is coming out. But yeah, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.